Inflation currently appears to be accelerating at its fastest pace since 2008, with consumer prices jumping 4.2% according to recent Department of Labor reports. If you want to know what this means for your portfolio and how you can prepare for inflationary concerns, this video is for you. With the pandemic thankfully beginning to wane, Wall Street is now looking beyond coronavirus to the risks that accompany the massive fiscal spending measures that were required to manage it. So far, COVID legislation and economic support has cost $5.2 trillion. This is more than was spent on all of World War II, which cost $4.7 trillion in today's dollars. The general sentiment so far is that this relief for businesses and families is welcome and good, but there is also legitimate concern about the impact on the US dollar and the potential for inflation. Some believe that all this relief is simply spending our previous tax payments, but the truth is that our government is creating new money and spending future tax payments. The U.S. jumped in with both feet in providing COVID relief, spending 25% of GDP so far. Demand pull inflation occurs when too many dollars are chasing too few goods, which is a real possibility. When demand exceeds what the economy can produce, there's competition to purchase these limited amounts of goods and services. And buyers bid prices up again, which causes inflation. Because of inflation, each dollar you saved will buy less and less as time goes on. At 3% annual inflation, something that costs $100 today would cost $181 in 20 years. Bonds are often viewed as an investment that typically provides stability. But while inflation has an impact on most securities, it doesn't affect all bonds equally. Your bond investments need to be tailored to your financial goals and take your other investments into account. Possible investment options to hedge against inflation include TIPS, which stands for Treasury Inflation Protected Securities such as bonds, precious metals, especially gold, cryptocurrencies like Bitcoin, inflation hedge stocks like materials and staples, commodities, including energy and food, some real estate like farmland, and some foreign stocks. If you haven't already, you could consider seeking safer inflation-protected investments as part of a balanced portfolio. Baby boomers should be especially concerned as most are at or near retirement. If you'd like help gauging your current levels of risk, we are happy to provide a complimentary financial review. Visit our website or send us a message to schedule a meeting. Our team of financial professionals are always here to help.